So as I said, in private equity, what happened? PE, general partners, limited partners. They both can appoint fund manager. They both can appoint. Let's say general partners contributed 8,000 and limited partners they are interested in, let's say 12,000. So both can contribute 20,000 as a capital, where fund manager can manage 20,000. So fund manager will of course invest in equity, bonds, even loans. See, first let me tell you something. It's a normal business. Just replace it. Instead P, say it, let's say it's a Tata Group company. Right, Tata Tech. Right? So general partner side, of course you would see Tata Trust. They're holding around 30% something. And now limited partner side, you would see IPO event recently which got listed, initial public offering. So they have listed and allowed investors. They have allowed investors like us, like people. So now they'll invest, and I believe most of the people they got the allotment as well. So they have invested in Tata Tech. But now if you see, the board means Tata Tech and even limited partners or shareholders, both they have appointed CEO as well. Now CEO is managing that entire capital and business activities on behalf of shareholders and as well as general partners. So same structure you would see in private equity as well. Private equity fund means general partners, basically they registered their company as a private equity fund and then they raise capital from limited partners. They also invested. If you see in Tata Tech, Tata Group also invested already. They have also invested huge capital, right? So in a private equity fund, general partners and limited partners both invest. If they want to, let's say general partners want to appoint any fund manager, they can. If not, then general partner also can play role as a fund manager as well. So if I take my institution example, let's say GMT Academy. GMT Academy, it's a small organization, so very small. We have recently registered 2 years back as a private limited company. In this case, my wife is only working as a CEO, board of director. She's playing all roles. All roles means all roles. So this is how you can relate. So if fund size is small, then you don't require extra fund manager. The general partners can only manage assets and everything. They'll take care of it. If not, then of course they can appoint. If the fund size is big, if I take the example of Tata Tech, so Tata Technology is a big and solid or sound organization. So in that case, it's a different story basically. Then they will have to appoint their fund manager or board of directors. So different bodies or hierarchies so that they can manage the business operations smoothly. That's the difference. So I hope now you got the understanding of who can invest and who cannot. But yeah, general partners, limited partners, and even fund managers all can invest in funds. All right, all they can invest it. Okay, so let me take you ahead. So as I said, we are going to discuss the investments and other concepts as well, because if you are not sure about concepts, if you are not sure about terms of private equity, so you won't be able to crack your interview as well. All right, so please open your notebook and try to note it down each and everything. It's a best practice to memorize or recall that when write it down, so that will even, I'm sure Monday to Friday you must be busy in some activities, but this time only at least you can give you 100% and note it down everything with me. All right, so if you see how many people you guys are aware about credit card, because as I said in last session also, credit card and even home loan business which are quietly similar with your private equity product. So now we'll first understand the credit card and exactly we'll replicate all your private equity terms with that credit card. And same example you can also refer in your interview process as well if you see any question around it. All right. So let's say there is one bank which is HDFC. Note it down. HDFC Bank. Right. So HDFC Bank, let's say, approved credit card. So let's say this person applied for a credit card. Then bank checked. Of course, bank will check obligations. It means CBIL, then the other parts like, let's say, KYC documents, assets, or maybe salary, income, and everything. After that, bank will take the decision. Let's say on the basis of CBIL, then let's say income, bank concluded that bank can offer 1 lakh credit facility to this person. Bank will offer credit facility to this offer, but bank will directly issue the credit, that plastic card or plastic money card, so where this person can carry that card anywhere, and if that person is really require that liquidity or capital or cash for a spending, or maybe for, let's say, if that person want to purchase anything as such, so that person basically utilize this cash to buy, right, anything, invest, and even spending. But hardly people they invest if they draw any amount from the credit card. Simple. So most of the time you would see they want to spend on their miscellaneous or maybe daily expenses. That's what they require credit card. All right. So this is becomes 10,000 becomes the main amount. If you see 10,000 becomes the main, 1 lakh becomes the main amount. Why? Because now see, each and every aspect is important. This person, now if I ask question, how much amount maximum, let's say, a person can withdraw from this credit facility? Come on. Maximum amount would be up to 1 lakh. Am I right? Unmute it and answer. Try to answer. Okay. How much amount A can, let's say, approved credit limit. Approved credit limit with 3.5% per month. Alright, so this is the credit facility. Now, if I ask this question to you, let's say this person want to pay miscellaneous bills, and outstanding bills amount is 1,20,000. Can this person utilize 1,20,000 from this facility? Yes or no? Can you try to answer? Come on, guys. This person.
No, he cannot do that.
He cannot. Why?
Because of the credit limit set on the card.
Credit limit set on the card is 1 lakh, correct? So it means the point is this A person can access only 1 lakh rupees amount from this credit facility. All right. Now, same. What if, sir, let's say this person, a person has a due amount or outstanding bill amount is only 50,000, and that person want to swipe credit card to pay that bills. And let's assume it highest limit is 1 lakh, but this person utilized 50,000 amount. How much would be the net outstanding? Net outstanding,
50,000.
okay. And what about the pending commitment? Pending, it means unused money.
50,000.
50,000, note it down this one. It's very important. Now I'm going to replace that with private equity. Right? 50,000 is unused money. Now, let's say I'm a HDFC bank manager. If I ask A to pay interest payment 3.5% on entire 1 lakh amount, will he able to pay? Yes, no?
No, because still he's in under credit limit.
Exactly. So only 50,000 which has been utilized for a spending. All right. So it means you can only pay interest payment on utilized amount. He will pay interest payment on only utilized amount. All right. Now your question would be like, sir, now you tell me, what if this A doesn't utilize money for the next 5 years, right? Let's assume it, this credit facility or credit card expiry is 2027, because every credit card comes with expiry. All right. Let's say this credit card has an expiry of by 2027. Let's assume it, this person, again, it was issued in 2015, but this person, let's say, hasn't utilized single penny from this credit facility, nor even this amount, not even this amount. So it means that HDFC Bank already gave a limit to this. But what do you think? Bank will charge fees or not?
No.
Why? Now your question will be like, sir, if you see that person hasn't utilized amount from credit facility, then why this person will make a payment on that particular facility, right? Okay. Did you check any credit card agreement by any chance? I'm sure no, because most of the people, they avoid to read terms and condition because they want everything in hurry. That's what they do. They don't pay much of attention on that credit agreements and all. But anyways, I'll explain that. Now, if you see, it's important to understand the different terms, which is, even if you don't utilize the money from this credit facility, still,
We pay unused fee, right?
yeah, still
Unfunded
bank will charge unused fees or unfunded fees. Unfunded fees or unused fees or upfront fees, you can say, or maybe sometime you would see terms like maintenance fees that they have charged it. Of course, the percentage of those fees would be very minimal, like 0.01%, maybe 0.02%, but definitely they'll charge it. Now your question would be like, so why? I'll tell you why. Let's say I have asked you to please keep 1 lakh rupees in your bank account for me. I'll ask you if I need it. Otherwise, I'll not ask. Right? I'm gonna get, let's say, maybe married in next month. So I would maybe require additional funding. So as a good friend, I have asked you to keep that in your bank account. Let's say that happened, and again I called you. Hey, can you please also ensure that at the moment, let's say I don't need that money, but I'm gonna planning for my, let's say, honeymoon. Right? So if you can park or if you can keep that money in your bank account as a reserve fund, still fine. Let's say you did that. Again, that person came to you by saying, "Hey, maybe next 6 months, let's say maybe that I would require funding support from you. Can you please keep that?" See, it's a now think from an investor perspective. You are an investor. You have parked 1 lakh rupees in the bank account just because your friend requested to you, right? Requested to you. But if you would have deposited this money in bank, let's say bank is offering 7% interest payment, you would have earned almost 7,000 on 1 lakh rupees for a year. Now you tell me, after 1 year, if I say, hey, thank you for your support, but finally I don't require that money. The reason is I have managed on my own, so I don't wanted to create any liability. That's what I didn't utilize. Now just tell me, as an investor, do you think it was see, as a support, if you wanted to support, you can, but you have lost your opportunity gain, which is 7,000 for per annum. If the amount, let's say, which is, if I add 2 zeros, so that becomes around 10 crore. So calculate it, 7% on 10 crore, almost 70 lakhs. If I, let's say, multiply amount, let's say this facility size is 1000 crore. Now calculate it, 7% on 1000 crore. We will lose that interest payment. And if you don't pay the maintenance fees, if you don't pay the front fees, or if you don't pay the payment on unused fees, then bank will cancel your facility, because facility comes with cost. And that's what I said, your credit card, it's a facility. Now let's replace the terms with your private equity. All right, let's replace the terms with private equity. If you see this facility amount, that would be your commitment, total commitment, where private equity firm sign that with, let's say, instead creditor, say LPs or GPs. Right, private equity firm signed that credit facility, means a credit facility agreement with limited partners and general partners. All right, general partners, they committed, and if, let's say, if investor signed or agreed with the credit facility, then fund manager can access that credit limit up to 1 lakh, not to only for expenditures, but I would say which would be for investment basically. And if fund want to pay any daily expense and all, so for that purpose, we can utilize that fund to mitigate daily expenses or to invest into different financial instruments. And maximum limit, as I said, so up to total commitment, that fund can withdraw or utilized and invest that amount into predefined investment, let's say, instruments or predefined investment goals. Same pattern you would see here. If fund manager withdraw amount, let's say, take the same example. If fund manager utilized, let's say, 50,000, so it means P will pay interest payment on this amount only. So that becomes basically preferred interest, which private equity funds offer to the general partners and limited partners. Prefer, it means preference. When we return investors money, we'll ensure that in a credit card, what happen, when you utilize money, of course you will have to pay that money to the credit card company, including interest payment and principal amount. So same way, if fund manager utilize that credit facility for an investment purpose, then investment manager will have to pay interest payment on outstanding, so it means used amount, and pending one, you can say again investor will expect, which is unused fees. So this is how your private equity funds works. So here, from an interview perspective, you would see 2 to 3 questions around it. One is, what is commitment? Commitment, it means it's a facility committed by the limited partners and general partners to the private equity funds for an investment opportunities. For example, let's say if the fund has a target of 1 CR of credit facility, so that fund manager can source right investors and sign credit facility agreement or commitment agreement, or I would say LPA, which is limited partnership agreement with investors for a credit facility approval. And once the credit facility approval received to the, let's say, fund, then fund can initiate, let's say, further communication. It means we'll see that how that communication works and all. But yes, so this is how your commitment works. This 1 lakh would be your total committed amount. What if, sir, there are, let's say in this particular example we just taken one, but what if, let's say, there is a fund manager who is working on GMT PIF fund. GMT PIF fund has a target of, let's say, 10 lakh, and there are A, B and C. There are 3 investors who are ready to invest. A is ready to invest with 5 lakh, 3 lakhs and 2 lakhs. So if you see, this has become contractual commitment. Why contractual? Because PE fund will sign contract with only this amount with that particular investor. So this has become your total commitment. This has become your total commitment. And fund manager utilized fund up to total commitment only. Again, fund can charge management fees. Management fees on only total commitment, but this should be an initial phase. Once the deal, let's say, has been closed, so after that management fees will be charged on NAV, need assets value. So that's a different story. But yeah, so in private equity we charge management fees on total commitment, and all partners A, B, C. Let's say this person is LP, this person is also LP, this one is GP. So for you as a private equity accountants, all will be LPs, limited partners, because they have a purpose where they want to invest in XYZ, let's say, investment. So it means they have a limited purpose, not unlimited. They have a limited purpose. They are pre-planned. Just they want to sit with each other just because for an investment opportunity. Otherwise, they don't want to sit each other. Right? Even in a private equity, what happened? Let's say they don't know each other even, but still they'll come together, they'll invest, and they'll get out of it after that. All right. So LPs. Now your question would be like, sir, now for example, if I ask, who are the LPs or what are the LPs in India? See, nowadays the trend has been changed. As I said, if you have 1 CR, then you can invest in P. Right? Your entire family's wealth, it should be at least 1 CR to invest in P. But now if I talk about YouTubers, if I talk about, let's say, influencers, sport person, right? Then if I talk about institution wise, there are insurance companies, pension funds, NBFCs, right? Even HNIs or big investors like Rakesh Jhunjhunwala, Adani, Tata Group, Birla, right? So they have already created private equity funds. They have their own funds, family funds and all. So they target companies and they invest accordingly. All right. So LPs, it means your YouTubers, influencers, or nowadays, like, even content creators, they're earning huge money Huge money, it means huge money. If your video complete, let's say 1 CR views, then you will earn around 10 lakhs. If your video cross, let's say 10 crores total views, your earning would be around again around 70 to 80 lakhs. All right. So think about it. So it means nowadays it's like if you cross your 1 CR, then you can directly invest fund into private equity business if you are interested and all. But yeah, so LP it means your YouTubers, influencers, or other people like or institutions like colleges or even ancient pension funds and all. They basically target companies and invest through private equity funds, where private equity fund managers take care of all investing decisions and all. And even private equity fund managers help insurance companies to manage their money in a better way, so that they can generate the more returns for their investors. All right, so note it down this one. So total commitment, so it means you can now you will have example with you, right? So you may expect question on it like what is mean by total commitment, or what is total commitment, or can you please elaborate more on total commitments and all. So you can give a credit card example, or as well as you can give this example as well. Total individuals commitments would be total commitments. If let's say there are 3 investors who have contributed 5, 3 and 2 lakhs, so total commitment would be 10 lakhs. So note it down this one quickly and let me know, so that we can jump on other concepts as well. All right, are you done with this? Can we go ahead?
Yes.
Yes, Vibhu.
Okay. Now, so another important part is in a private equity, you would see, like capital call process. Capital call, it means how exactly that works. And we'll see before that why we have discussed commitment. Now you can relate. Let's take the same example. Let's say uh, fund manager is managing GMT private equity fund. All right. So fund target is 10 lakh or 1 million, and A agreed with 5 lakhs, B agreed with let's say 3 lakhs, same example, and C agreed with 2 lakhs. All right. So this is becoming your total commitment as well. But ये agreed with approved facility which is 5 lakhs, but approved in let's say 5 calls. Approved in 5 calls. What it means? So, ये investor will make a payment of this 5 lakh in 5 different stages. 5 different stages. So, here let's say fund manager has sourced one investment opportunity. Now, fund manager got one, let's say, this under construction property or projects. which has highly, uh, let's say return potentials, return on investment potentials. And here the funding requirement is around, let's say 2 lakh, but in a different stages, not in one go. In a home loan, what happened? Bank invest funds in different stages, of course. In first stage 10%, 20, depends on the construction size and all, right? So fund manager has investment opportunity. Fund manager has investment opportunity, right? Let's say from a real estate segment. Real estate segment. So now, if fund manager has any investment opportunity as such, then fund manager will initiate because fund manager, see, if you have a credit limit, still fine, right? You can go and directly, purchase anything because you know it, you have a credit card in your pocket. Same thing happened with fund manager as well. If fund manager is known or aware about credit facility, let's say fund manager has a credit facility of 10 lakh, so it means fund manager is equipped with commitment. Fund manager has a commitment received from 3 different investors as they are interested to invest in, let's say, XYZ opportunity. Because commitment, it's kind of a legal obligation. Credit card, it's kind of a legal obligation. If bank signed that obligation with you, it means legally you are allowed to access that credit facility and invest or maybe spend that money anywhere. Same way, if you have, let's say, as a fund manager, if you have signed credit facility, if you have signed, let's say, obligation with any of the investors, so it means you are legally allowed to access that particular credit facility as and when required. But yes, here in this particular private equity business, it's not exactly like credit card, because in a credit card, once the amount is approved, utilization is depends on your fund manager, sorry, that credit card holder, right? Sometime he'll spend, let's say, 10,000, sometime 8,000, sometime there is no pattern. There is no pattern. But in this commitment, you would find a pattern. As I said, investors will approve credit facility, but they'll directly confirm the calls, let's say 5 calls, 10 calls. So it means this facility will call one time, let's say for 1 lakh, kind of this 1 lakh, 1 lakh, every time it will be called for 1 lakh. So basically, fund manager can invest only 1 lakh at a time. Fund manager cannot invest 5 lakhs of this. So it means it's an obligation. Even though you go and check it in credit card setting, you can also set the target. You can set the target, utilization target. So you can also set the target like every time you want to utilize only for 5,000, max to max 5,000. Then once you set a target, then credit card will not allow you to access more money for that particular time. So means at a time you can only utilize 5,000. So same way, if investors put a restrictions on commitment that fund manager can only access 1 lakh at a time for that particular investment opportunity, so it means if fund manager initiate any communication, if fund manager call, it means actually they'll call through email, or let's say maybe directly they'll give a ring to the investors stating that, hey, look, we want the 1 lakh rupees as you committed, so we want that because we have a better investment opportunity. If fund manager has any investment opportunity like this, then fund manager will initiate call for what? Call for a capital, because this we treat as a capital. If fund manager call for what? As I said, call for approved commitment, right? And if investor LP, let's say, transfer that amount, to the fund manager, so that becomes your capital call, or even drawdown. Capital call and drawdown both are same. capital call and drawdown both are same. Draw, it means nikalna, paisa nikalna, right? So where fund manager has drawn money or has drawn, let's say, capital from the commitment, because this is becomes your individual commitment, as I said. So same logic now you can apply to all. Maybe this investor can, you know, provide funding in 3 calls. Maybe this investor can provide funding in 2 calls. Depends. Depends on individuals, investors, funding availability and all. But yeah, this is how your capital call works. We'll see more in details about capital calls and other things as well. This was just a trailer. On capital call, we'll have a dedicated sessions to understand, each and every term. How capital call initiate, why we initiate, what are the different types of capital call, right? How that, we processed it out and all, everything means everything in details. All right, so this is how your capital call works. Now from interview perspective, you may expect question on capital call and drawdown. So now I'll again elaborate it in a systematic manner. Capital call, it means it's a part of agreed commitment or approved commitment, let's say by the limited partners, where if fund or fund manager has any investment opportunity, or if a fund manager want to pay any due expenses, then fund manager can initiate or ask accountant to initiate capital call to the investors, right? So that process would be your capital call process. Capital, it means fund that we are asking investors to process payment, right, for a maybe investment purpose or maybe for a mitigation of daily expenses purpose. So this is how your capital calls works. Now you can unmute and ask any questions if you have any.
Shivraj,
Hmm.
so basically, if I've understood correctly, there is a fund which is
Hmm.
called as GMT fund,
Hmm.
and it requires investment of 10 lakhs, right?
Hmm. Hmm.
And they have appointed a fund manager.
Yes.
Now, fund manager is asking for money in different stages, which
Hmm.
we call a capital call or a draw.
Hmm. Correct.
So this understanding is right, right?
Yeah. Now, see, if you
Okay.
replicate this with credit card, it will be easy. Is credit card company, once they approved, let's say, take the same example. When you apply for a credit card, is that company transferring any money to you?
No.
Only credit card, right?
Yeah.
Same thing happened here as well. So it means when we signed commitment, it means we are not taking any penny from investors. We are just asking them to sign commitment. So we'll ask money even future on the basis of commitment. So it means, see, fund manager, if the fund manager has any investment opportunity as such, so that fund manager can ask investors to make a payment as per the agreed commitment, so that they can invest and generate more return for their investor, basically.
Okay.
Shivraj, regarding capital calls, we need to draft an email to the limited partners for to get the capital, right? So this is done by fund accountants or fund manager will document. I mean, drafting email to the investors to get the capital.
Basically, fund manager actually, it's their job to do it, but as a fund accountant, our job to review that with the bank statement. Right, review that
Okay. So
capital
whether
call
this is
notice
or
with
not,
the, yeah,
right?
bank statement. Check with the bank statement. Prepare journal entries in the books of fund. Perform reconciliations, and record that in the books of account with the that particular capital call terms and all. So interest payment, or basically there will be different terms that you can check and record it in the books of account.
Okay.
That's all. Any other question, guys? Unfortunately, I won't be able to continue today because we'll have to stop here. The reason is I have just got a message from my family member, so I'll have to go there. It's a medical emergency in between.
For 2 minutes, Shiv,
Yeah,
let
go
me
ahead, go
let
ahead.
me. So when we were talking about credit card and when we are talking about the fund, so GMT is the HDFC bank, right?
Sorry. I missed your voice. Come again?
Okay. So with two example about the credit card and about from this example,
Hmm.
GMT is the HDFC bank, right?
Yeah.
And it has
See,
given a credit limit of
little
10 lakhs
change you
to.
can here, because that if you see, basically banks is giving money from their pocket, but anyways they are raising money from the depositors only or investors only, right? Even for that matter, credit cards and all. Here, same thing you can apply, where private equity funds, they are directly raising funds from the investor. They are not middleman entity. They are directly raising and investing into or giving or investing into direct products. But same pattern that you would see, try to do
No,
one.
I'm getting confused in
Which part?
when you draw this diagram, that fund manager is above the GMT. So basically, once the fund is created and the fund has requirement of 10 lakhs,
Hmm.
and then the fund manager is appointed, and then the fund manager gives the capital call, right?
Correct. Fund manager, yes, fund
Okay.
manager manage everything. Fund manager basically, as I said, even GP can also manage it. Let's say, for example, take my business example. We are looking for a 10 lakhs funding, and I'm the CEO of my business, or even I'm board of director as well. Once you invest fund in my business, I'll manage that. And even if I need any additional funding, let's say 10 lakhs you have committed to give in 5 lakhs, means in two calls. Right? If I need a funding, I'll give a call to you. Hey, hi, can you please invest 5 lakhs because you have confirmed already. Then you will transfer that amount to me. That's all. It's a very simple game. Second time, if I need additional
But
funding, again I'll give a call to you. Hey, look, first time you have invested 5 lakhs. This time again you will have to invest 5 lakhs because you have committed. Committed, it means it was a commitment you have signed for a 10 lakhs, right? So 5 lakhs are still
yeah,
pending. Can you please invest? If that person again invest, yes, then I'll receive 10 lakhs entire amount that I'll invest in my business, and I'll try to generate more value.
yeah, got it.
Okay, so
Yeah, go ahead.
okay, so if investor are investing in GMT fund, so
Hmm.
that we can call as capital call.
Correct. From
That's
investor perspective, they'll directly call it as an investment, not as a capital call. So we'll see that what accounting entry we recorded in the books of investor as well. But just to give you quick clarity, investor will record it in their books as a investment in funds account debit to cash account credit, and fund will record as a fund accountant. If you record accounting entry in the GMT fund book, then the same accounting entry you would record like cash account debit to capital call account.
yes. So for investor it is investment, and what fund for fund manager it is capital call.
Exactly.
That's it.
Exactly. Yes.
Okay. Thank you.
Any other question, guys?
We'll go through this question again. In case there is a question, we'll come
Yeah,
up again
yeah.
to go.
That you can do. Yes.